8340 odd level, so largely flat with a bit of a positive bias. But the last 3 months have seen the markets grinding lower from that 8800 level all the way to 8350. So let's find out what the prognosis is going ahead. Sushil Kedia, President of the Association of Technical Market Analysts, joins us on the show to talk about that. Sushil, hi, good morning. I remember you telling us that the top for this market could be somewhere around that 8550 level or so. We've actually come off from that level. What is the prognosis going forward?
See, we've gone back to that level twice. If I may be allowed a little bit of a jargon. The first time we went there, it was wave A, 7930, lower low than all the lows we've seen in the last 6 months. In traditional trend analysis, people will call it as the lowest low. I see that as an early warning that the downtrend that started from 9,100 has not yet gotten over. So the ABC pattern tells me this entire move twice to 8550 area is only a counter trend correction of the longer term downtrend that started from 9,100 going down to 7,930. I'm at this moment a bit worried and anticipating a move that will complement the downtrend that came from 9,100 down the way to 7,930. So out of a sense of conservatism, maybe I have been talking about 7,700 in my prior few interactions with you. That's a humble way to say that, markets are going down only till that much. I will be mentally open even at 7,400. I'm not projecting that right now. But yes, that kind of deep downside is quite possible.
What will take it there? Which part of the Nifty?
Yeah, I mean, see, in usually downtrends, the correlation of stocks is much lower and they have their own individual trends. And it's a bit of risky to, cut it fine on everything. But then banks are definitely looking weaker than the rest of the pack. Even the IT stocks that look like having a small blip that will sustain this next 1 or 2 days upwards blip on Nifty. I think I'm quite worried on the long-term downtrend on IT stocks. What I'm also worried about is that BPCL, though not so much of a heavyweight on the Nifty, it might lose straight away 20-25%. In that measure, there are again some counter-trend stocks right now like Tata Motors or Tata Motor Steel are oversold. Cairn is oversold, Hindalco is oversold, so there are a number of oversold stocks and we'll have cyclical rotations. It's not going to go down in one straight line, but perhaps over a month and a half, a down move to 7,700 looks quite feasible without ruling out 7,400.
So this 7,700 level is something that you would expect in the next 1 month. So what would your year-end targets for the Nifty be? Would you have any expectation there?
See, I'll hazard a guess, once we survive the 7,400 to 7,700 pocket, I'm hoping, this downtrend from 9,100 should get over by then and we should get back to the long-term uptrend, which means a journey back into new highs. But, forecasting so many legs up and down is a bit adventurous, but that's what I would guess right now.
Okay, the other pillars of the market have been Reliance, L&T to some extent, and now BHEL is also getting a lot of look-in. How would you draw the charts of these three stocks? For
short-term or medium-term trading, say the 1 month time frame we are looking at, I will definitely not buy Larsen & Toubro. Perhaps if I see a down close on that, might not be a bad candidate to short sell. And while I'm quite bullish on BHEL on the very long run, but then again, BHEL should also participate on the downside, giving a 15-18% kind of a correction from here. And you spoke about Reliance. That is not looking like creating any exceptional moves out of line with the market, so perhaps it will trade in line with the market.
You said that Tata Motors looks oversold and could perhaps move higher. In fact, today I think is the first day in many days that we're seeing a bit of a rebound in Tata Motors. It's up about 1%. For someone who has a slightly longer term target for the next 2 to 3 months, what would your target be?
See, for adventurous trading, Tata Motors can be nibbled into a long position, but when the overall market perspective for me is down, I'm not keenly looking for many long ideas. So this looks like more like a rebound might go up 8, 10%, 7%, and that's not the best of the trades I want to take. But yes, if somebody's stuck up with Tata Motors, maybe it's giving you some respite and maybe there will be time to get out of a losing position 8 to 10% higher.
Okay, let me just zoom out of the Nifty. If 7,700 is where things are going, there is a goodish bit of capital depreciation or loss that people are likely to face. Is there a place to hide in the mid-caps?
I don't want to get adventurous into the mid-cap space now. No. See, if there is this is going to be quite almost a replication of, 9,000 to 8,000 was 1,000 points. It took about 2.5, 3 months. And if I'm saying that this leg down is going to be more mimicking the first leg, so in a fairly well-structured down move, I don't want to be really looking at many bullish bets.
Okay, no, I'm not saying bullish. It's more, people, there are some people who have to invest in shares, for instance, equity fund managers. So for them, like, is it an Ashok Leyland? Are there pockets which will outperform a falling market?
See, it will try and capture that kind of an outperformance, which though not the most advisable thing to do.
Yeah.
See, fund managers should stick to their conviction, high conviction, longer term bets, say accumulate things on weakness. Maybe if, I have to still, we have to still address the thing that what are the places we can rotate into. Then a trading oriented approach where one is nimble footed, these oversold stocks will from time to time keep giving rallies. And we can try and hide temporarily.
Like the Kane Vedanta type.
The Kane Vedanta Tisco types. Maybe the Tisco has not made its final bottom. But if somebody has those skills, try and capturing these 10-12% kind of rebounds in between is perhaps one way.
You said 7,700 in the Nifty in the very near term. What about the Bank Nifty? What's the target there?
See, typically Bank Nifty moves about 1.25 to 1.5 times. So we can project it that way. But in the immediate run, say if I'm looking at next 5-10 days of the market, so banks are going to be leading the way down. They go down first, IT stocks perhaps go down next. So there is always a rotation. All the stocks will not move up and down the same extent every day.
What is the hierarchy within banks? Because we are speaking about 30% of the listed space. Is there, which are the weaker, PSU banks would be the weaker pockets, you think?
Yeah, they're definitely looking like the more weaker pockets.
Okay. So you would not advise anyone to venture out and buy any of these beaten down names like PNB, Bank of Baroda, etc.?
See, it depends.
Or trade in them.
It depends who one is. See, Bank of Baroda has not hardly produced any meaningful rebound even during this recent rally. So it is showing weakness. Maybe, if there is somebody who has a strategy to keep nibbling into stocks, say 5 to 10% of their total purchase size over the next 20 days and is doing a VWAP strategy or something. So there are different people in the market. And I think for a conversation like this, it's much easier to convey without confusing the audience by talking very specific short-term trades. So I'm not looking at buying, going long on the banks right now. It is going to be advisable to short them, and somebody is playing a 1-year time frame and can absorb a 20% loss or a 15% loss. The fund manager should keep on buying his high conviction ideas, because in any case, for that kind of an audience, the call remains that we'll see likely 9,500 before we break past 7,400. So if somebody can take a 10% downside, the upside is still looking like 30-40% in this market over the next couple of years. So that's a different audience.
Right. You want to leave a couple of trading ideas for our viewers?
Trading ideas in the sense, yes, definitely Nifty looks like should be a good short trade with a stop anywhere higher above 84.60. I'm not revealing mine. You have to choose your stop loss based on your risk tolerance. But I think that is the area, 84.
That's for this contract, July contract.
The current month.
Okay.
In line, I think, even shorting banks is fine. I think give IT stocks a couple of days more. And there will be shorting opportunities in them. BPCL has been a sort of very buoyant stock. So one has to nibble in small positions in that, but a 20% down move is a decent one to catch. I think it's extremely overbought, showing all the signs of that it's all done and ready to glide down. So at the appropriate signal, that should be a short trade. I'm basically right now broadly biased in line with the broad market direction to be seeking short trades. Though for very sharp traders, a Tata Motors or a Tisco or a Cairn or a Vedanta, they're all different stocks looking for rallying.
Well, even as you speak, actually all the shares have moved down on an intraday basis. The Nifty's gain has been pared down to 0.1% and the mid-cap is actually in flat terrain. Looks like the index can dip into the red any time. But give us one more chart. Crude. Has it seen the worst at $45 if you're looking at NYMEX? Or can it dip further?
No, I don't want to entertain ideas that, oil will be free one day.
No.
45,
so Iran may come in and supply a bit.
Oil at 45 is definitely seriously overdone. And I think for the medium term, there are more than enough signals to believe that a move back to 80 is far more probable and maybe higher. For now, humility requires me to talk only 80. I'm not looking at a bearish oil,
That's
life is
certainly
not so
times
easy.
with 7,400, you will have to say. Because we have been riding high on a cheap
The fall
oil
in oil.
sentiment, for sure, even if not reality.
I'll take a liberty here. We all suffer from intellect. And we all try to correlate things.
Okay.
But in the real world, they might actually not be so correlated.
Okay, on that very wise note, we will end this conversation. Thanks, Sushil. Well, the shorter term may see a bit of pressure, but the long term up move is intact. With that, we wrap up.